Welcome to Markets Today Talk Back. Markets have lost a bit of ground in today's session, but that only means there are more opportunities out there in the highs that the markets entered a week ago. How should you play the market? Should you buy, sell, hold tight, bide your time before you buy, or buy right now? This is the show where we help you answer all those questions. I'm Lata Venkatesh. With me, Surabhi Upadhyay.
Hi, Lata. Yeah, quite a turbulent ride for the market. But here's how you can get your questions answered. Very simple. You just need to send us your tweets using the hashtag AskCNBCTV18. And we're going to try and answer as many questions as we can over the next 30 minutes. Before we do that, here's a quick check on all the big market headlines of the day. Global cues spook Dalal Street as market slips in the last hour of trade. The Sensex ends below 30,500. The Nifty snaps its four-day rally to end at the lowest point of the day.
Mid-caps underperform in trade to end over 2% lower. However, the IT pack saves the day to end over 1% in the green.
CESC confirms a CNBC TV18 news break, announces a four-way split, which will create separate listed companies in power generation and distribution along with retail and other businesses. The company's fourth quarter earnings disappoint. The stock tanks 16%.
Bajaj Auto's fourth quarter earnings are slightly better than estimates. Stock remains subdued as management says the industry environment is challenging.
Well, those are all the big headlines. Joining us on the show today to answer your stock-specific questions, market expert Prakash Diwan. And we also have Mitessh Thakkar to give us a technical sense on all the stocks and the market itself. We'll get to all of that in just a bit. But Lata, let's just get sort of, your thoughts on what happened today. We never had great global cues to start off with. And by the end of it, it was a 1% cut.
But we had dismal cues. We had the biggest cut that Wall Street has seen in 2017. And the important point to agree with you is that Asia did not quite replicate Wall Street's woes, at least for a better part of the trading day. It seemed to be recovering. But once Europe opened, it did appear that the global markets have taken the altercation between Trump and Comey rather seriously. The firing of Comey is now seen as probably a cover-up for President Trump's or his associates' dealings with Russia. And that noise is now confusing the market, wondering whether the promised tax reforms and the great rally that started on November 8th is in danger because that hope trade may not play out. This is the first serious correction in global and Indian markets, and the Indian funds have also used this correction to take some profit. There is no guarantee or no evidence to believe that the global rally is over because earnings in the US have worked very well. So the Trump trade was not a hope trade, it was also an earnings trade. So it's possible that this correction is going to be shallow, as have been all corrections in the last 2 years. It's possible that this time around it could be a deeper correction.
Well, let's see how this plays out. Of course, back home here today, along with the 1% cut on the benchmarks, we had a lot of drubbing in the mid-cap universe as well. Let's get in Anuj with his sense on all that transpired today. Anuj.
Well, the market was down today, but honestly, it was not really all out. I mean, it was 1% for the Sensex and Nifty, 1% for the Bank Nifty. But yes, the mid-cap index fell more. What really happened? Overnight cues, of course, from the US were bad, extremely negative, and the markets latched onto that. Our markets a bit more because our market was over-leveraged. And you saw a lot of selling after the first gap down was bought into. So mid-caps really crumbled in trade today. A lot of froth was taken out of mid-caps, and warning signs were there. Put-call ratio was at 1.40. That corrected to more reasonable level of 1.26. India VIX was at historic lows of 10. That corrected to somewhat genuine levels now, 12% higher. Could actually rally more from here on. And IT stocks, of course, held out because, once again, markets thinking is that Trump is not good for IT. So if there's some problem with Trump, then it's good for IT. I mean, that was the market's logic, of course. But today, problem was in leveraged stocks and in stocks where traders had gone really overboard. So stocks like CESC after the announcement, IDBI Bank, JSW Steel, Bharat Financial Inclusion, HDIL, India Cements. I can go on and on. The list is long, but you get the idea of what kind of stocks fell in today's trade. The sense I get is that this is one of those corrections which makes market healthy, especially in the mid caps. And once again, this is a market which is giving you an opportunity to maybe accumulate some quality stocks. But of course, we'll find out as we move on from here.
Point taken, Anuj. I think, nevertheless, there was some serious selling because the rupee is giving you that impression. Until now, the rupee was strong when the dollar was weak. The rupee was strong when the dollar was strong. But today, the way in which the rupee buckled and moved towards 65, good for Indian stocks, but that clearly indicated that some serious money got taken out of India. Dollars got bought by foreign investors. So this selling should not be ignored. There has been some actual fund selling.
Okay. Well, on that note, let's quickly start answering your questions. SK Harish has sent us a Twitter query. This one is on Maruti Suzuki. Now, he's holding 40 shares. He bought them at 6,400. Wants to know about the future and how high can the rally go. So, you know, Prakash, Maruti is probably like everyone's favorite and darling stock.
Certainly Prakash is.
And certainly Prakash is. We also had Mr. Bhargava come in today talking about that second production line they're putting up in Gujarat. 6,400. How much more money does one make from there?
So, I think there's no stopping Maruti given the kind of strength in the market that we see for its product acceptance. And from what the management shared today was very importantly the need that they've expressed to the parent to prepone the production line, which means they don't want to lose out on this momentum in market share gains. By the way, Maruti in the last 3 years has gained market share in double digits. So it used to be about 47%. Today it's about 56, 57. So that's a significant change. And when you look at the premiumization that they have already successfully adopted after the Nexa launch, that is yet to kind of pan out in terms of operating leverage. So my sense is Maruti is a great buy on any dips. If you're holding it at 6,400, you are in a safe zone. You already have a good cushion, of safety of sorts. Where does it go? My sense is, from a valuation perspective, at 7,200, 7,300 is when you would have to start looking at EPS accretion to justify the valuations. But till then, it will continue to attract premium. And I don't see any let up from that point. So till that 7,200 zone, he's safe enough. He should probably relook at it only if there's some sort of a challenge that a Mahindra or a Tata Motors can pay. And this whole thing about electric vehicles that has suddenly come into the news in the last week or so, take it with a little bit of a reality check that disruptive changes are in the offing, but they don't happen overnight. So don't get worried and panic out of it.
Okay, yeah, I must add a bit more about what Mr. Bhargav told us
15% growth.
Accept your point that he said there is so much demand that supply is the issue.
Yes.
I mean, which consumer good company will tell you that? And so they are advancing the second line from 2019. Yeah. They want it advanced to 2018, and therefore the third line also will get advanced by whatever it was, probably 2020. That also will get advanced. He said 15% is not possible.
Yeah, so that's because the constraint on supply.
225,000 vehicles more is what 15% will amount to. That we cannot do. And therefore, I mean, I thought the humility of that key takeaway is important. And the third key takeaway was that they are not going to stop manufacturing small cars. If anybody thought that, because there are more margins...
The Brezza is doing so well, so, they'll wear away. Yeah.
They clearly said India's market is there. They are 70% in the under 4-meter car, as he called it.
Yes.
But, as you say, there will be premiumization. Within that under 4-meter car, they will give more value adds, perhaps.
So the Desire, which
better automated
relaunched, the new variant of Desire, if you see, they've, in value terms, it's already gone up about 8%. So,
okay, no, I'm sorry, I'm cutting you. It's just that we are trying to accommodate more questions. Sure. Aftab Khan is a student from Karnataka, has been calling us. Aftab, what is your question?
Hello, Lata ma'am.
Yes.
This is Aftab. I'm having 100 shares of Sun Pharma.
Yes.
Hello?
Yeah, go ahead.
I bought it at 640 rupees. What should I do? Should I hold or should I accumulate more?
Okay. You are in any hurry for money, or you can hold it for... You are a longer-term investor?
No, I'm a short-term investor.
Okay, fine. In that case, we'll give you first some technical help. Mitessh, what should Aftab do?
Yeah, see, I think short term, I think the stock is not doing much, but I think it's come to very important medium to longer term support areas of 620 to about 580. My sense is that I think maybe if you can extend the time horizon for about a few months, I think, about 3 to 4 months, I think you should make good money. Keep accumulating at these levels or on declines about 620 odd levels. And I think you will get an exit around 735 to about 750. That could be the range which the stock can hit once any kind of short term reversal kicks in.
All right, let's move on. We have a Twitter query coming in. This is from Ghanshyam Dakre. He wants to know the future of Glenmark. We don't know his entry price, so not too sure about that. But Prakash, the way Glenmark has sold off, the way it fell off the cliff after the fourth quarter numbers and no sign of recovery whatsoever. Yes, it couldn't sort of keep up with the expectations on the US business side, but would you look at any contra play, bottom fishing, or was it really that damaging, the performance this time around?
No, I think it was an overreaction of sorts because of the high expectation that the stock went into earnings with. And on Tuesday, we spoke about this when the numbers come out. But of course, it's taken us by surprise that the sub 700 zone that it's moved into in the last couple of days seems a bit far-fetched. And you know, one of the reasons why people have been slightly skeptical about this is because the management itself was responsible for building those expectations. So this is what happened to Lupin about 6 quarters back. When everything was looking positive, and of course they had a different trigger to bring it down. But here it's the Zetia sales that were priced in a bit too fully, and it's not panned out. So my sense is Glenmark offers a very good opportunity to buy into at the sub 700 levels because the realistic valuation for this company is far lower than its peer group at this point in time. So, and it's no more a small mid cap kind of a play. It's significant in size as well. So just go ahead and buy if you want to do it with a 1-year perspective.
Fair point. There are people who say that this is Dr. Reddy's in the making, in its glory days, Dr. Reddy's, an indigenous research company. But yes, serious falls. It takes a lot of courage to believe at this juncture. The next Twitter query comes from Abhishek Kandela. He has written to us asking about Hindalco. He has 200 shares, which he bought at a price of 180. Wants to know if he should hold or sell the stock. Mitessh?
I think to me, Hindalco looks like a clear exit. See, it's been trading in a range of about 180 to about 200, since sometime in Jan and Feb early, and it's not being able to break out of the range. The signals are that the momentum is slowing down, so I think good levels to take profits and get out. I think if it breaks 180, good chance that we'll get the stock around 160 odd levels.
All right, that's the view on Hindalco. We have Mr. Ajay Nahata, a viewer from Kolkata, on the line. Hi, Mr. Nahata. Good evening. How can we help you?
I have the 35-second share of the ITC.
Okay.
At the rate of around 310.20.
Okay. Are you a long-term investor? Can you hold it for a while?
Yeah, I will hold for the more 3 to 6 months.
You're willing to hold for a longer while. Okay, Prakash, ITC, 3 to 6 months.
So being from Calcutta, I'm sure he has a lot of affinity to the company given its presence there. But on a serious note, yes, it's definitely a hold. There are enough skeptics in the market who talk about this company having fully lived its glory and nothing much is happening on the FMCG business. But I think it's too early to write it off from that perspective. And the tobacco business is as charged up as it could be. So just hold. 300 is not very far off from where it is today. And you could probably exit at about 360, 375 in a year's time if you can extend your time horizon.
Okay, well, since he said 6 months, there perhaps is the technical view as well, Mitessh, on ITC?
See, I think technically there's nothing much wrong with ITC, but I think, in terms of outperformance and underperformance, I think I would suggest switching out from ITC, possibly getting into Reliance on correction. I think if he is to hold for 6 months to possibly 12 months, Reliance would be a much better bet.
Okay, that's the reply for you, Mr. Nahata. If it's for a shorter period, maybe you will make more money in getting into Reliance, is our technical experts' advice. Take a break on that note. We are coming up. More questions, more answers on the other side.